Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English. And today we're looking at Compass Inc. and a little something that adjusted how many shares they had to give out after buying another company. So Compass Inc. filed this report back in September 2025, and it's all about a deal they made to buy Extidus Reports' Christie's International Real Estate. This report explains some of the fine print that came up after that deal officially closed in January 2025. When Compass bought this other company, they agreed to pay some of the price using their own stock. Now here's where it gets a little complicated. The number of shares they had to give out wasn't fixed. It depended on the price of Compass's stock a year after the deal closed. Basically, if the stock price went up a lot, they'd give fewer shares, and if it went down, they'd give more shares, but all within certain limits, like up to $50 million worth. This is often called a collar in these kinds of deals, like a price range. But then they changed the rules. They made a new agreement called an early release collar, which let them pay some of the sellers earlier. To make this early payout happen, they set a new condition. If the stock price was above a certain level, 8 body price on the last of those days was also above that amount, then this early payout would be triggered. And guess what? It was triggered. On August 27th, 2025, Compass handed over 28.4 million shares to these early sellers. This was a big chunk of the shares, about 74% of the total originally planned. Now, what does this mean for you and me if we own Compass stock? Well, by making this early payout happen under slightly different terms, Compass says they reduced the number of new shares they had to issue. They claim this saved their existing shareholders from about 4.1 million extra shares showing up down the road. That's a pretty good deal if true, as it means your piece of the company isn't getting diluted as much. However, not everyone took this early payout. Some sellers, representing about 26% of the shares, decided to wait. They'll get their shares delivered in 3 equal parts in 2026, 2027, and 2028. And the final number of shares these folks get will still be based on that stock price a year after the deal closed back in January 2026. Here's a really interesting part. Compass also said that if these waiting shareholders get their shares at the same price as the recent early payout, it could save another 1.5 million shares from being issued. If that happens, the total number of shares saved from dilution could be close to 5.6 million shares. That would mean the total shares given out for the deal would end up being around 38.5 million, which is a lot less than the original plan. Even before this early payout was confirmed, Compass was already telling investors to expect about 38.5 million shares to be issued in total for this deal. And good news for shareholders, they said this early payout doesn't change that expectation for their upcoming earnings report for the third quarter of 2025. Compass is planning to be a bit quiet on the specific number of shares that will be issued to those who waited for their payout. They'll update everyone in early 2026 after all the numbers are in. Now, looking at this whole situation, Compass seems to be proactively managing the financial impact of their acquisition. By agreeing to an early release collar, they managed to pay off some sellers and potentially reduce dilution for existing shareholders sooner rather than later. They're playing a smart game by trying to minimize the negative impact of issuing new stock. The key takeaway here is that while they did issue a significant number of shares for this acquisition, the early payout and the potential for further reduction for the remaining sellers is a positive sign for shareholders looking to avoid dilution. The main risk here is still the future stock price of Compass, as that will ultimately determine the final number of shares issued to the non-accelerated sellers. But for now, it looks like they're navigating this complex share issuance pretty effectively. Here is that while they did issue a significant number of shares for this acquisition, the early payout and the potential for further reduction for the remaining sellers is a positive sign for shareholders looking to avoid dilution. Alright, that's our breakdown of Compass Inc.'s share deal. What's your take on these numbers and what they signal for the company's future? Do you think this early payout was a good move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into company filings. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.